What's up, guys? Welcome to another week in crypto with myself, Brian, here with Dino. Lots of interesting patterns happening, mostly on the decline over the past week. And we're going to talk a lot about, obviously, the health of Bitcoin and Ethereum as the top two assets in crypto continue to be polarizing at the moment. Before I jump into it, as always, I would like to begin by mentioning to everyone that this video, along with all of our This Week in Crypto videos, are never intended to be investment advice. They are here for us to educate and show what is happening on our fundamental data platform in terms of the on-chain and social activity happening in the cryptocurrency markets. So keep that in mind, and we will show you as much as we can today, take questions at about 40 after the hour, and show a few altcoins that we're looking at, such as Quant and a few other Ethereum-based coins. So to begin, as always, I'm showing the Santiment screener, which you can find easily right here on app.santiment.net here in the header section under all Santiment projects, which basically shows every single project that Santiment covers. And as we can see, Bitcoin was mostly flat over the last week. It actually feels like it hasn't been because it's declined pretty notably over the last 2 to 3 days and was up around 41K just a few days ago, now down to about 37.1. The fear is starting to creep in again in the markets, and rightfully so. I mean, we see other assets such as Ethereum at -8% and many of these altcoins in the red now, close to or even above a -10% drop over the past week. Of course, we do still have a handful of notable gainers, such as Hex, such as Theta Fuel, and over here we had XDC and Quant, which will, as I said, we'll touch on right before we go into questions here. So mostly a concern over the past week. It continues a pattern of Bitcoin kind of ranging and altcoins kind of taking the brunt of the losses, while Bitcoin is sort of staying volatile in anywhere from that 33 all the way up to 41K range, as it continues to be in ever since the big drop about a month and a half ago. So we'll talk a little bit now about why that's occurring. Before we do, we put up this poll last night, and I wanted to share it really quick. And we asked, at what Bitcoin price would you, at least temporarily, sell at least 50% of your current Bitcoin holdings for fiat if given the opportunity? And interestingly enough, half of the answerers wrote 100,000 and above, meaning they're waiting for at least about a 3x, if not a little over a 3x, in order to actually sell a significant portion. 50%, of course, being quite a bit of your portion, but it's saying that people are feeling very patient still in terms of the long term. It doesn't mean that people aren't going to take profit should the price rise into the 40,000 above or 60,000 above range, but overall, people's long-term plans are still showing that people are leaning toward waiting out for six-figure prices in Bitcoin, which could happen, later this year, could happen in 5 years, who knows? But I haven't seen a poll quite like this.
I actually wonder what the chat would say, like people that are in chat right now. I don't know, Max, can you make a poll right now, since as we're talking, make a poll with the exact same questions. And let's see what chat thinks, because I think there's a few people every stream that are pretty bearish about Bitcoin. So I'm curious to see how divided we are in chat right now.
Right.
I at least that's the impression that I got over the last couple of weeks of these streamings, is that a lot of people seem to suggest or think that we're gonna head down to like mid 20Ks. So I don't know. I mean, our data in general, and we are going to show it in a minute, but our social data and social sentiment data in general seems to suggest the exact opposite of this poll. And it seems to suggest that the people at the moment, on average, are quite bearish about Bitcoin. Not just about Bitcoin, but about Ethereum, about Ripple, about Cardano. It's across the board a consensus bearish bias. So yeah, I don't know. I'd be very interested to hear what the chat says.
Yeah, it's also worth noting that a quarter of the answerers wrote that they'd never sell this much. So there is that contingency of people who will hold strong even past that 100,000 mark and don't have a price where they would sell half of their holdings. So there are still those uber bulls out there who believe that Bitcoin is a lifetime type of investment that you never want to let go of. So it's interesting to see these two extremes pop out as the heavy majorities, while anywhere between where we are now and 100,000, there aren't many people who would sell a significant amount of their precious holdings. And going off of Dino's point,
by the way.
Paul is shared in the chat. Let's figure out, because I'm already seeing 200K, 50K. I'm never selling, so we're already divided in chat. Let's see what the overall consensus is. Yep. Max just shared the poll, Brian. So it's gonna be a while before we go back to it.
Gotcha.
Yeah.
So I'll jump over here to weighted social sentiment, and maybe we can talk about it from more of a macro sense based on what our platform is looking at in totality, from social platforms that we follow, that being Twitter, Discord, Facebook, Reddit, and other pro traders chats. So what we're looking at now is essentially a measurement of the average overall perception of Bitcoin based on volume of how often it's brought up, combined with the positive versus negative connotation behind their commentary. And we have an algorithm that can really comb through and figure out, whether someone is super bullish or super bearish through the comments that they make via many coded words that we have put into an algorithm to read between the lines. And right now, what we're seeing is another big dip into bearish territory here for the second time, and the biggest occurrence since early April. So it's been about 2 months since the crowd.
Sorry, Brian, if you move the interval from 1 day to 12 hours and you smooth it out a little bit, I think you'll see it's the bear sentiment is actually even slightly lower than it
smooth it out more this way, or
to the left. Yeah, to the left.
Got it.
Yeah, it's quite low. It's not the lowest since the start of the rally, but it's quite low.
Yeah, absolutely. I see it's way lower by going this granular, and we're showing that.
In chat.
Okay, cool.
For you in chat, and I will display it on stream now.
All right.
Gotcha.
While you do that, let me just give this point a little bit of clarification. So this last data point that's appearing to be very low, it's still getting aggregated. So it might shoot up a little bit, but it's going to sit at these very low levels nonetheless. Overall, I think for both Bitcoin, and you can also, Brian, show Ethereum, and you can show Ripple, a lot of people seem to be scared. And we're going to look into some of the on-chain metrics today that seem to suggest this as well. We're going to be seeing some amount of people selling at a loss, selling Bitcoin at a loss today. We're going to see some spikes in exchange inflow for Ethereum today. There's still people that are scared. And I think that's a pretty hopeful sign for like a short-term recovery for BTC. We'll have to wait and see, obviously.
Yeah, with every one of these big dips here, it seems as though there tends to be a bit of a dip, or a bit of a bounce, I should say, once it gets to this level. Going back to January, when we started to see these similar levels, it bottomed out at about 31K, big bounce. Back in March, early March, we were starting to get to then what was considered a scary price of 47, 48, and then a big bounce to almost all-time high levels. And then here more recently, early June, it's at least kind of ranged, and now we're in that low range again.
1 second, just Max, you can remove the poll. Thanks. You can remove it from the stream so that Brian can keep sharing. Oh, okay, never mind. Go ahead, Brian.
Yeah, so long story short, we're in a negative range again, and historically, that is a good thing for Bitcoin's price because when the crowd tends to start fudding uh, and exemplifying major fear in the markets and doubt that prices can continue to push, that tends to be when they push. And if you're going against the crowd, for those of you who have used SanR a bit, you may have already noticed this. You tend to profit best when you are in the minority in terms of your perception of where price will go next. And that is always how crypto markets have been.
So before we move, just to stay on Bitcoin for 1 second, I wanted to talk a little bit about this last spike in bullish sentiment towards Bitcoin, because it's very interesting to me, at least. So this spike right there, I wonder if people in chat know what this is about. Without delaying it too much, this spike came about 12 hours after it was announced that El Salvador is going to accept Bitcoin as legal tender, right? Or adopt Bitcoin as legal tender. So right afterward, we kind of, I think, shot up to 38.5K, if I remember correctly. But either way, it's very interesting how our data almost immediately picked it up as a signal that the crowd is becoming bullish. What's more interesting to me is the fact that once we started dropping back down to about 37K, I think a lot of people expected that the El Salvador news were going to pump Bitcoin to about 40K. I think for a lot of people, this narrative of Bitcoin becoming an institutional sort of not institutional, but sort of being recognized by governments and being used by governments in one way or another, even if it's just El Salvador, right? Was going to become the catalyst for market-wide recovery. Once that did not happen, I actually think that made a massive blow to the confidence of the market, at least according to our data. Immediately we went not only down, but we went lower into bearish sentiment than we were even during the first part of this crash. So I think, and I wrote about this in our last week's report, I think the way that I am reading this chart is basically the crowd has been very excited about El Salvador news because honestly, it's the first bullish news that we've had about Bitcoin since the correction. It's the first time that somebody said anything nice about BTC in like a month. And once that didn't pan out, I think it gave a huge blow to the confidence of the market. And the way that this chart looks to me, it seems like it's saying, if El Salvador news can't pump Bitcoin to about 40K, can anything pump Bitcoin? It seems like there's quite a bit of FUD and in general sort of disillusionment with BTC. Once again, all of these things I think are good for Bitcoin in the short term.
Yeah, disillusionment is a great word. I agree, Dino. There's just a lack of trust right now with any news story that comes out, especially when Bitcoin's declining and a positive story about Bitcoin comes out. People tend to scoff at it. I remember, 2018, mid 2018 specifically, when things were really getting bad and getting to that $4,000 range. There were all sorts of news stories saying like Bitcoin's the future, Bitcoin is about to change the world, and the public perception, especially on Twitter, was nothing but people shaking their heads and scoffing at it. But it turns out those articles were telling the truth, and there was a lot of positive things to look forward to, and that was essentially the bottom. And we very quickly climbed back up to 7 for a while, and eventually got to where we are now a few years later, all the way up to 64,000. So just keep in mind that these news stories still matter, whether the price is jumping up or jumping down, and people may get very short-term, dopamine boosts from an article about El Salvador and then forget about it a week later, but it's still legal tender in El Salvador, right? So we have to keep in mind that news story did change things for at least one part of the globe for the indefinite or permanent future. And we need to keep that in mind, that these positive news stories are still existent and not just completely falsified.
Yeah, so maybe we want to, basically all of the coins, the top coins look like this in terms of their sentiment charts. Just trust our word for it, or you can check it out on grabs.santiment.net. Let's move, Brian, maybe into other metrics that are looking interesting for Bitcoin. So I think you've got your NVT model all prepped, right? Go ahead.
So really quickly, we'll just blast through this segment because it is important what's going on in terms of circulation right now for the top two assets in crypto. for Bitcoin, we are seeing a significant decline in the amount of unique tokens moving from one address to another. This is what you would expect being on, the I guess second month or almost third month of coming off of an all-time high. There tends to be a bit of stagnancy. Right now, as we just saw, there's a bit of fear going on in the markets, and that has led us to what is currently a fourth straight month of a bearish signal. This overall metric here tends to work best by looking at it in a macro sense, where whatever the month was the month before in terms of that color, the month after will follow. This line here was the average price, and once we had our first red bar, the next month was a very mild decline, and it still was red in April here. Therefore, in May, we had an even bigger decline. And in May, we still had a red bar. And right now, we're just barely above the average price that we saw in May. I would assume if circulation continues to stay this red, that the average price will end up being below where it was in May, come the end of June.
Right. So for people
seeing.
that are not familiar, Brian, with this metric, how is it calculated?
Yeah, it's essentially taking market cap divided by circulation, which, as I said, is unique amounts of tokens moving from one address to another. It doesn't account for wash trading. If one address is repeatedly buying and selling, it's only counting it as one address compared to all of the other addresses that are making movement. So it's a really good way of showing, how many different addresses are actually active and moving their coins from one address to another, because utility is key in crypto, whether it's active addresses, one of our favorite metrics, or just circulation, where we look at specific coins being moved. When coins begin to become stagnant and not move, that is when crypto prices tend to decline. Alternatively, when you start seeing all sorts of dormant coins move, that's the time to jump in.
So I think that's a good segue into Bitcoin's mean dollar invested age, because it kind of ties into this metric, right? It sort of shows the same pattern. I think both of these, by the way, are sort of a longer term indicators. So even though I think in the short term, I actually feel kind of okay about Bitcoin's chances for recovery, but from a macro perspective, I think both the mean dollar invested age and the NVT show the same thing. So for people that are unfamiliar with the mean dollar invested age, Brian, if you want to only look at Bitcoin for now and zoom out to the last, I don't know, 6 years of data, just so we can kind of see what it's looked like. And I'm going to explain very shortly what this means. So Bitcoin's mean dollar invested age is a metric that we've developed over at Santiment, I think last year, or actually now it's been like a year and a half. And the idea behind this metric is that it tries to compute the average age of all tokens on the blockchain, in this case of all Bitcoin on the blockchain, but it weighs those Bitcoins, units of Bitcoin, by their purchase price. So in general, first of all, a rising mean dollar invested age slope signals a period of redistribution. So it's a period where Bitcoins, especially those Bitcoins that are acquired at higher prices, are moving to other addresses more frequently. So it's basically the average age of Bitcoin is declining, meaning that there is more activity on the network, right? So it suggests a sort of redistribution from one investor cohort to another, from weak hands to long-term bulls. So it's essentially a cycle of redistribution and reallocation of Bitcoin funds. And then a rising slope in mean dollar invested age suggests a period where most Bitcoin holders were actually sitting on their bags. There is a pivot, a network-wide pivot towards dormancy. People are on average, or holders are on average, not moving their Bitcoin on the blockchain as much, suggesting that we are moving to a tail end of a redistribution cycle. So there's going to be less activity on the market, on the network. And previously, obviously, past performance isn't indicative of future results and all of that. However, previously, we have seen this metric be, or the bottom of this metric coincide with a with a bull cycle high and with a period of price consolidation and correction, because it essentially indicates, okay, the entire reallocation period is done. In this case, I think throughout this last 6 months, reallocation would be away from casual Bitcoin holders to institutional traders. I think that's sort of the essence of this latest reallocation cycle or redistribution cycle. And it's been very clear since the start of the rally. However, in the last month, we have soared into the positive direction, and I don't think this is going to change unless we see like a massive spike in Bitcoin's price to like 55 or 60K. This, I think, suggests that most users or most holders of Bitcoin, most users of the Bitcoin network are moving back to their, I don't know, to their summer house or whatever. They're no longer interacting with Bitcoin on a daily basis. And when you see sort of a network-wide pivot towards dormancy, there's going to be less new blood moving into the market. There's going to be less engagement with the coin in order to propel the coin to 40, 50, 60K. So this is why it's sort of there's going to be less fundamental support, less value being transmitted on the blockchain to validate sustainable price growth. So from a macro perspective, this continues to be, I think, the most bearish signal that we have at the moment. From like in a short-term perspective, I think both the Bitcoin's social data and some on-chain metrics look fine, but like on a 3 to 6 month scale, maybe even longer, it's early days still. I think if you look at the previous drops and previous spikes, there have been a few sort of up climbs, and then we actually move down even further. But it's certainly like one of the signals that I look at on a daily basis, and it's continuing to grow. So I think that's exactly what your NVT model is showing, Brian. There's less and less activity on the network, and it's perfectly visualized on this chart.
Yeah, 100%. These two metrics definitely relate to one another, and they're both showing the same thing, and that is the fact that we are getting significantly less tokens being moved, especially in the dormant category, as this chart shows very well. Just a significant lack of dormant coins being moved the way they had been between October and the beginning of May. So for just about 6 weeks now, we've been on a pretty steep decline in terms of dormant coins moved, and that coincided with the very beginning of this massive dip that occurred in that first week of May here.
Yeah.
But why don't we move into a few more metrics that might look a little more encouraging, beginning with millionaire behavior at the moment. Yep. And what this is showing is the addresses that hold between 100 and 10,000 Bitcoin at any given moment, how many total coins they hold at this time. And we actually bottomed out with this metric just about a month ago on May 21st, when these addresses held 9.02 million Bitcoin. And since that time, they have accumulated just about 90,000 Bitcoin just in the span of a month. So based on this metric, where there is definitely some correlation to the price, we're seeing some healthy accumulation from the whales right now, despite the fact that circulation is down, despite the fact that dormant tokens aren't moving at the same rate. And it appears that the key stakeholders in Bitcoin are still buying with confidence and scooping up more with the expectation that prices will eventually get back to those all-time high levels and beyond.
Yep. So this is if this chart in particular was moving down, I would be much more concerned about Bitcoin in the short term, because what it would suggest is that number one. So Brian, just for a second, flash us Bitcoin's daily active addresses, please, just so we can see what it's been looking like recently. Yeah, and let's look at the last, what is it? That's last 6 months. Let's look at the last year, just to give people the idea of how low Bitcoin's daily active addresses are. So obviously this last little drop is the data being aggregated for the last 24 hours. So take that with a grain of salt. It's not as low as 434K. It's just being updated once a day. We also have a metric that gets updated once an hour, this same metric. But just for simplicity's sake, we're looking at this one. Bitcoin's daily active addresses are continuing to kind of be in that 800 or sort of 750 to 900,000 range. So it's been dropping, or it's dropped fairly significantly since the crash. And I think it ties in perfectly with the NVT template and with the mean dollar invested age. Pretty much all of these metrics, what they're suggesting is that there is a subsection of Bitcoin holders that are no longer interacting with the market. We have lost about 200,000 daily addresses since the drop, just poof, gone from daily interaction with Bitcoin. I think overall, and we're also seeing this in the case of Ethereum, because fees are continuing to, and I wrote this at the start of the week, fees are continuing to drop. They're now at their lowest. Ethereum fees are now at their lowest point since I think like November. However, the active addresses, unique addresses that are interacting with Ethereum are still declining, and the amount of unique Ethereum tokens that are being moved on the network are at like a 6-month low. So what that means, and what this metric also means, is that we are seeing sort of a network-wide abstinence by at least a subsection of Bitcoin and Ethereum holders. Now, on the other hand, while we are seeing, so let's just recapitulate what we've talked about so far. The social metrics suggest that Bitcoin-related sentiment is fairly bearish. On-chain metrics, especially the mean dollar invested age, NVT, and DAA, or daily active addresses, suggest that we are fairly, that a lot of people are concerned, or they're not interacting with the Bitcoin or generally top caps over the last couple of weeks. However, while there's quite a lot of bit of concern among both investors and general network-wide participants, the whales, the large addresses, are one outlier. They are the one entity of holders that we have been tracking that have actually accumulated throughout this crash. 90,000 Bitcoin is not the end-all be-all, but it's a signal of increased confidence by at least some Bitcoin addresses, large Bitcoin addresses. So if we were to have to sort of create a narrative or a story around this, it would seem to suggest that, while there's blood on the streets, whales seem to be accumulating. Obviously, this is only looking at on-chain data. It's making some assumptions about the market, but this is what I'm seeing right now based on a variety of our metrics, Brian.
Yeah, absolutely. I also have this chart, which kind of divides between the whales and the rest of the holders here. And what this is showing is the 1,000 plus amount of addresses, and comparing that versus the 100 or 10 to 1,000, the 0.1 to 10s, and the really micro addresses out there. And both the large addresses and the whale addresses here have been declining. So despite the smaller amount of whale addresses accumulating more, the fact of the matter is we had the most amount of whale addresses way back in early February, where we were at about 2,489 in terms of 1,000 plus Bitcoin addresses, and we have dropped all the way down to about 2,170. So a little over about 319 addresses that existed 4 months ago that now do not. And that's a pretty significant stat too. And of course, this red line is still important as well. These are the still very large addresses. 10 to 1,000 Bitcoin is arguably there's still some whale addresses considered to be in there. If you're talking about, 800, 900, 700 Bitcoin, and they are declining pretty precipitously as well, being at 151.7K back in December and being at 143.9 now. That is a massive drop.
For sure. We're running up, or we're getting at the half-hour mark. Maybe one other metric, Brian, to talk about Bitcoin before we move on, is exchange data for Bitcoin. So we've recently done some improvements on our exchange metrics, and one thing in particular that I would like us to look into is exchange inflow in particular. So if you want to isolate just exchange inflow for Bitcoin, there we go. So this, and then we're going to look into another metric, guys, but let's start with this one. So this metric shows the total amount of Bitcoin that are being moved to known exchange wallets on a daily basis. So the very simple idea behind this metric is, okay, if there's more Bitcoin being moved to exchange wallets from individual wallets, it suggests that people are looking to sell some of their Bitcoin, because why else would you move massive amounts of BTC to exchanges, especially while the market is crashing, right? You're probably not doing it for staking or whatever. So this is why, for example, both in April, what is that, April 24th, we've seen a big spike in exchange inflow of Bitcoin. That's right. And we've also seen a similar one around mid-February, right at the bottom, right there. Yeah. After the crash. So both of these sort of indicated capitulation spikes of a lot of people moving their Bitcoin bags to exchanges in order to sell because they were fearing further corrections, right? So by far the biggest spike in exchange inflow for Bitcoin has happened after this latest crash. We've had actually a cluster of spikes. It was a massive amount of BTC being moved to exchanges daily. It was a massive sell wall that needed to be absorbed. However, last couple of weeks, there's been a clear decline in the daily sell side pressure that we're seeing for Bitcoin. So just the amount of Bitcoin that are being moved to exchanges daily has massively subsided since the crash on May 23rd. That began on May 23rd. Now, also, if you, Brian, look at the supply of Bitcoin on exchanges, so this is only looking at the total amount of BTC being moved to exchange wallets on a daily basis. Here we can look at the supply of Bitcoin on exchanges, and it's the same sort of idea, or it's the same trend at least. We are seeing the very significant spike in the amount of Bitcoin on exchanges right as the crash started after the Elon and China news. We've seen, a huge uptick in just general availability of BTC on exchanges. However, over the last 30 days, we have sort of shrunk down back to pre-dump levels in terms of the amount of BTC that is currently available in the exchange addresses that we track. So overall, I think even though we had to go through a period of fear and capitulation and just people unfortunately feeling a lot of pain, it seems like there's been a sort of winding down of daily Bitcoin sell-offs, which in my opinion isn't necessarily a bad thing. Like after a while, you need to have a period where sell-side pressure subsides. It's absorbed and it allows for long-term or even short-term just price recovery. So the fact that it seems like we are at the end of a capitulation period maybe for Bitcoin holders also might be an optimistic sign for short-term Bitcoin's recovery. So that's one last thing that I was going to check, Brian.
Yeah, it's a good point you make, Dino. It's not necessarily 100% guaranteed yet, but there are metrics on our platform that are indicating that those who really wanted to sell large amounts have already done so. There can, of course, be many more major sell-offs. We're not saying that the sell-off is over and that no further damage can be done, but at least from the initial huge drop-off that happened between May 11th all the way to a couple weeks later, the biggest inflows tended to happen there, and we're not seeing any signs that there's a second influx of major sell-offs from people who are thinking that the high 30Ks are the time to do another one. So if we do see another inflow spike, it would likely come with another rebound or another plummet where people then, who bought the dip on this round, finally are thinking, okay, the dip is real, now I need to jump out.
Yep. I think one sec, Max. So two things for chat. Number one, we have started rounding up a poll for the types of coins that you would like us to look into after this part of the stream is over. So we're rounding up the Bitcoin analysis, and now we're going to start taking audience questions. So if you have ideas on coins that you would like us to look into, there are some coins, guys, these last couple of days that are showing very strong bounce backs, like Quant. What else have we seen? Matic, AMP. There are coins that are breaking out from the Bitcoin pool. So if you want us to look into a particular coin that you like, let us know in the chat, especially, or I would suggest that you ask us for Ethereum-based coins because we have the most data for those coins. If you want us to look into Solana or Cardano, we can do so. However, we still haven't integrated on-chain analysis or on-chain data for those coins. If you want us to take a look into daily active addresses, exchange inflow, those types of metrics, ask us about Ethereum-based coins because we have the most comprehensive data coverage for ERC20 coins. All right, second thing that I wanted to suggest or answer is Midi has asked us in chat, what does the current spike in BTC short signify? So I was actually gonna skip over that and talk about it in our weekly report. Guys, everyone that has the SaneBase Pro subscription gets access to our detailed weekly report where I'm going to be talking about these and many other metrics for Bitcoin. So if you're not already a Pro subscriber, make sure to do so because it's going out later today. We are seeing a spike or sort of a dip in the funding rate for Bitcoin currently on BitMEX, but I've been checking out other exchanges before the call. BitMEX is probably the biggest outlier in this regard. So there's a significant drop in the funding rate on BitMEX. What this means, so what is funding rate? Funding rate is a fee paid by one side of the perpetual contract to the other. Essentially what it means, when the funding rate is low, it means that on average, Bitcoin shorts are paying Bitcoin longs, and the market has a decidedly bearish bias. And then when the funding rate is high, it suggests that Bitcoin longs are paying Bitcoin shorts, and therefore the derivative market is is bullish. So currently, we are seeing another sort of drop in Bitcoin's funding rate on BitMEX, but also we've seen a similar drop on OKX. Huobi has had a sort of a neutral funding rate throughout this week, so it's about 0.01. And then Binance has today dropped just slightly to, I believe, the last time I checked it, it was like minus 0.006% or something like that, very, very small. But overall, I think it points to, or it signifies the same thing that we're seeing on social charts. It signifies the fact that derivatives market are also starting to become more and more concerned about Bitcoin's short-term potential and mid-term potential, and they're betting against it. So if you look at Bitcoin's funding rate, this time on BitMEX, so because we're looking at that chart at the moment, previously, throughout this last 6 months, every spike in Bitcoin's funding rate has coincided with a local top for Bitcoin, which makes perfect sense because the market has become way too greedy. We had a mountain of over-leveraged longs. I think during the April all-time high, there was about, what was it? It was like 900 billion liquidated longs. It was something crazy like that. It was an all-time high in terms of liquidations. So these types of spikes signify a massively bullish bias towards Bitcoin and a increased risk of price normalization. Simple as that. Now, on the other hand, these drop-offs, the last time we've really seen these types of drops in Bitcoin's funding rate was in January. So if you look at like a period between January 20th and January 25th, basically it was a period where we went through this correction and then consolidation. This was the last time that we've seen this sort of deep dips in Bitcoin's funding rate, and it marked local bottoms for Bitcoin at both junctions. So it does seem to suggest that as the funding rate drops lower, the market is becoming more and more fearful, and therefore it might be overselling and undervaluing a particular asset, in this case Bitcoin. Now, I will say, so this is the last thing that I will say about this, is that BitMEX is currently still an outlier. So there's a big drop in BitMEX, but other exchanges are yet to follow suit. Binance is very slightly in the negative in terms of its funding rate on Bitcoin. Huobi is still at 0.01%, so it's flat. The market is still undecided on Huobi. And then OKX has also had a little bit of a decline over the last couple of days. So we're getting there. In terms of a derivative bias, we're getting more and more bearish, but I would still not call it a consensus, right? So that's all I wanted to mention, Brian.
Yeah, I don't have anything to really add on this. We're in a very, very bearish territory, at least from a BitMEX perpetual contract funding rate standpoint right now. And obviously this spike, which at the time, this actually happened on a Friday, I believe, and we saw it and we weren't sure if it was legitimate, but this was the biggest spike we saw since Black Thursday, 15 months before it. And it was a signifier that we were going to be transitioning into a highly leveraged short range that we hadn't really seen in a very long period of time. So it's interesting to see that we're still here. And based on history, this is a good sign, as Dino said. It means that people are showing a tremendous amount of FUD in terms of their real trades, in terms of where they're putting their money right now, not just commenting on Twitter. People are putting a lot of doubt in terms of their own staking in the market right now, and that's very reflective.
So I just checked the Binance. It's back to 0.01%. So I think it dropped slightly negative the last time I've checked it, but now both on Huobi and Binance we're back to like a flat rate of 0.01%, basically.
So they're flat, but BitMEX is still very negative.
Correct. Correct.
If we were to average them together, it would be mildly negative, putting those three. So take that for how you will. But we do think that BitMEX is arguably the most important one because of their amount of leveraged trades that go on at any given time. And I certainly put this as an indicator for my own analysis when I do make, SanR predictions and things like that.
And speaking of SanR, so okay, I think we're rounding up the Bitcoin analysis, and we're gonna start taking audience questions. So I think the poll is in chat, guys. Anyone that wants to vote on which coins we look at next, let us know in the poll. Before that, Brian, I'm just gonna share my screen briefly and go over SanR.
Go for it.
Don't mind. Okay, cool. So for those that are new, Brian, let me know if you can see my screen, by the way.
All looks good.
Okay, cool. So for those that are new, this is SanR. SanR is a platform that we built over the last couple of months. It's a first decentralized marketplace for predicting price prediction signals. So the idea is very simple. If you have an idea of where the market is going to be going next, let's say we're looking at Bitcoin and we think, okay, Bitcoin whales are accumulating. We are seeing a reduction in sell side pressure. We are seeing sort of a bearish consensus. We might say, okay, there might be a potential for Bitcoin to rise from these levels, right? So you select a coin that you believe you have some amount of confidence about where it's going to go next. And you can either choose to create a sunrise signal saying that this coin is going to rise in price, or a sunset signal suggesting that the coin is going to continue to decline in price. You can also set a few advanced parameters like target price and stop loss. And there are two things that you can do with this type of information. First of all, you can enter a bi-weekly competition that a lot of our community members have been involved in over the last couple of weeks. In particular, we've gotten more and more people playing with us in terms of, betting on where the market, we're not betting, but just predicting where the market is going to go next. And those that perform best get rewards in SAN tokens every 2 weeks. So in order to become or to enter your forecast into a bi-weekly reward program, you need to stake it here. And let's say, so this is just me demonstrating how the platform works. I say, okay, Bitcoin might rise from this level on. I click on SAN Rise. I've entered it into a reward program and I click open forecast. And now I'm going to sign a transaction and it's going to show up here. So the moment that I set up or open a staked transaction, what happens on the back end or behind the scenes is every staked prediction gets recorded on the blockchain as an NFT. And it becomes a part of your irrefutable and immutable sense of market. So it becomes part of your market reputation, and everybody on the platform can go back and look through all of your predictions and figure out, okay, how has this person performed throughout the last couple of weeks, throughout the last couple of months? How many open predictions has he made? How many closed predictions has he made? And what was the overall performance of the these predictions? And you can follow people that you find to be very impactful and successful in predicting the markets, or you can also follow people that seem to suck at predicting the markets because you might want to counter trade them. Like if CNBC was using my platform, our platform here, I would probably follow them just so I can counter trade them, right? So anyway, for example, let's look at the current leaderboards. Actually, let's look at the previous round. Max, where was your address? I wanted to show people how. Actually, maybe would not. So let's not reveal to people what your address is. Actually, right? Let's just show Balresh as usual. Max, sorry for putting you on the spot here. The other Max Bartel, that's running the stream here. So anyway, you can
actually
go
with the subscriptions we are working the next big milestone that you can mint as a provider, or anyone from outside can mint subscription with locked collateral inside. And the moment someone minted subscription for any provider, you cannot follow for free anymore. Yeah, you will have either to obtain the subscription or mint with the value which is higher than the last one. This is where the real fun begins. But yeah, just because you mentioned, I wanted to share it.
Yeah, thanks.
And and then the providers start getting monthly, well, when minted some percentage, and then the monthly some flow of revenue. Yeah, it's more interesting things are coming. But even now, it's quite a lot of fun.
That's the end goal of this platform, is to basically decentralize the entire process of you as a market analyst, right? From the point at which you create a prediction about where you think the market is going to be headed, to the point at which you develop your reputation as a market analyst, and then finally you are able to issue your own subscription NFTs, so that only the people that you want to be following your predictions can follow them. You can set the prices as whatever you want them, and that's going to happen in the future. It's something that we're working on. But anyway, what I wanted to show is you can click on any prediction that any person has created in the past, and you can look at their performance, right? So for example, I can see that this particular user here has had a very nice sort of prediction for Ethereum. Here at the bottom, he suggested that the Ethereum was going to rise from as soon as it broke below 2K, and it closed it at 2.1 just after we entered into a consolidation period. And at the moment, this particular address has 15 closed predictions and a performance of about 70%. Not bad at all. So I'm currently following this particular address. I'm following a few others. But anyway, this is sort of the idea of the platform. So if you want to play around with us, the only thing in order for you to enter your prediction into a staking competition is you need to stake SAN. But and you need to sign a transaction. So there's going to be some transaction fees. But now transaction fees are super freaking low. They're the lowest in 6 months. So this was a problem 2 months ago, but now I don't think it's that much of a problem anymore. So anyway, you can also play around with this platform even without signing any transactions. Just kind of opening, right, Max? You can just create a prediction without entering it into a staked program. However, then it doesn't get recorded.
Signing you always need, because it's always a kind of there is no username, only your public key. But you don't need any SANs. You can use for yourself, check around. Exactly. No need to stake or
Okay. Anyway, so this is the prediction that we made. I mean, just sort of based on some of the metrics that we were looking at and just talking about the market and demonstrating how it works. It was about 0.0% when 0.08% when we started. It's now at about minus 1.4%. So, I mean, we definitely grew to about 40K throughout the week. But the market is sort of starting, continuing to consolidate. So you can see sort of the results of open signals here, and you can go through each of these addresses to see what their previous signals looked like. Okay, anyway, that's it for SanR. We're now going to move into the final part of the stream, which is audience questions. So the other Max Bartel, can you tell me what the top choices were for the coins that they would like us to look into, the chat would like us to look into?
Yes, I have the results on stream now.
Okay.
Number one is Ethereum with 4 votes, and then we have Polkadot and indexed finance, NDX.
Okay, so it's Ethereum, and what was after Ethereum?
Polkadot.
Okay.
And then indexed finance, NDX is the third.
Okay. It's interesting that people ask us about Ethereum. I'm more than happy to talk about it. Yeah, we spent much of this stream actually talking about BTC. So usually we cover some Ethereum metrics, but yeah, let's talk about ETH, because I think there's quite a few things to discuss about Ethereum. So let's start with let's start with Ethereum's sentiment. Because it's pretty much the same as for Bitcoin. I just want to show it to people because we talked about it, but we haven't actually shown it. Ethereum, Twitter, smoothing, and we're going to... the first thing that we're going to talk about is what is, according to data from more than 1,000 different crypto social channels, what is the average sentiment towards Ethereum looking like at the moment based on our machine learning algorithm. So the results are... This is the current state of the Ethereum sentiment. Let's, so this is the last year of data. we've had quite a strong bullish sentiment towards the all-time high. And then since then, we've dropped quite significantly. Now, this is a 6-hour scale. Let's look at the, usually I like to look at the 12-hour interval because 6 hours get a bit noisy sometimes. But yeah, similar to Bitcoin, we've had a pretty strong drop over the last 24 hours. Like I said, sometimes this latest tick in data is still getting aggregated, so it might narrow down a little bit or shrink a little bit throughout the next couple of hours. But on average, it's certainly bearish. This is Ethereum. I think somebody said, you said Polkadot, right, Max? So just since I'm already here, we can look at Polkadot's sentiment as well, because I think it's looking pretty much the same. Let's zoom in. So Polkadot was actually trending in a positive direction, and we had a spike in bullish sentiment, a short-lived one, but a spike nonetheless, similar to the this price high here. I think, what was the price of Polkadot at the time? At 2024. So as it sort of hit this 25 level resistance, there was a period of elation around Polkadot's social data. People were getting more and more bullish towards it. As it failed to cross the 25K mark, we were back down into a predominantly bearish territory. And I think this is where most of the market is at the moment. So from a social perspective, from the perspective of our social data, pretty much all of the top capped coins are, the crowd is bearish towards them, which in general, based on some of our backtests and based on just anecdotal evidence, this is usually a, or more often than not at least, a positive signal for a potential for price recovery. Obviously, it doesn't have to happen, but it suggests that the crowd is undervaluing these coins, that there's not a lot of euphoria, there's not a lot of sort of over excitement about these particular assets, and as a result, there's a potential for a more sustainable rally before we once again get people tweeting rocket emojis and moon emojis and whatnot, and the price starts tanking again. So from a social perspective, it's looking fine, right? Now, I also want to see what Ethereum's exchange activities look like. So we've talked about Bitcoin's exchange inflow and how it's been declining, right? Two metrics that I look at when it comes to Ethereum's exchange inflow, or Ethereum's exchange-related activity. Number one is daily deposits. So daily deposits are addresses that are being used. The main purpose of deposit addresses is to funnel a particular coin to centralized exchange wallets. So when you send Ethereum to Binance, it doesn't go directly to Binance. It first hits that deposit address, which also belongs to Binance, and then it goes to a hot or cold storage. So the idea is, if you track these deposit addresses, you can kind of use them as a proxy for the amount of speculative activity or sell-side pressure towards a coin on a daily basis. In other words, if more deposit addresses are active, more people are sending Ethereum to exchanges, therefore more people are probably looking to sell Ethereum, right? So it's no surprise that we've seen a massive spike in Ethereum's daily deposits as it started to rally. We've also seen a pretty big spike during a correction, suggesting a capitulation spike of sorts. More addresses moving to sell while the price was tanking, suggesting that people were fearful that more correction is headed, right? Either way, throughout the last month, we have seen a sort of normalization of Ethereum's daily deposits. Overall, it seems like the amount of sell-side pressure seems to be declining, similar to what we have seen on Bitcoin. If you look at exchange inflow for Ethereum, or the amount of Ethereum being moved to exchanges, we have seen several pretty big spikes during the bottom. We have seen another sort of couple of spikes, although not as dramatic as this one, around local bottoms here as well as here. There has been a little bit of an uptick over the last couple of days as Ethereum's prices started to drop back to like 2.2K, suggesting that some amount of additional sell-side pressure is forming, which is to be expected. So overall, there's less of a there's less panic sell-offs, is what I would say, according to on-chain data. There are still some people selling, but that's healthy. You don't want the exchange inflow to be completely flat, suggesting that the market is overly confident about the coin's potential. So there's, I would say this is a normal, healthy amount of, or a healthy reaction from on-chain participants to a downtrend. There's a little bit of an uptick in exchange inflow, suggesting, okay, relative to Tuesday, more people seem to be sending Ethereum to exchanges. On Tuesday, we had Ethereum at 2.6. Now we've got it at 2.2K. It's completely normal that some people are going to be fearful. And in fact, I think that's a hallmark of a healthy market overall. So this exchange metrics for Ethereum don't look all that bad to me, I got to say. Now, I have talked about average fees for Ethereum, and I want to show it to you guys here. So this chart shows the average fee that is required to interact with the average cost to interact with the Ethereum network, right, over the last year of data. So at the moment, actually, let me zoom out to see exactly how low we are at the moment. At the moment, we are at $3.08 or 0.8 cents in terms of the average cost to interact with the Ethereum blockchain. So the fees to interact with the Ethereum blockchain have declined massively. They're basically mirroring the sort of mid-December levels way before the rally. However, even though the fees are very low, we are not seeing a complementary spike in daily on-chain activity for Ethereum, which I think is very interesting. And I wrote about it at the beginning of the week. So number one, daily active addresses are declining. They're continuing to decline. I mean, let's just draw a line here. Boom, right? From 700, I think the peak was around 780,000, all the way down to about 470,000 daily active addresses today. So that's around what, 35% drop over the last month and a half. In either case, the amount of unique addresses interacting with Ethereum on a daily basis has clearly and strongly declined since the all-time high rally, which makes sense, obviously. However, what's kind of not as sensical is the fact that it's declining even though the fees are very low. So you would expect that, you know, the reduction in fees would incentivize more daily on-chain activity and more network activity overall. However, even with these low fees, people are still fearful and in general abstaining from interacting with the market, which I think is kind of the same. It's the same idea behind Ethereum's social sentiment being low. This is just the same idea in on-chain data. We're seeing a general resentment towards interacting with the network, people being fearful across the board. And also, if you look at Ethereum circulation, which is the amount of unique ETH that are being moved on the blockchain, transacted between addresses on a daily basis, it's very low now. Actually, throughout this week, we have hit 6 months low twice. So basically the lowest since December here, suggesting that across the board, there have been very few, relatively speaking, very few unique Ethereum tokens moved on the blockchain, transacted on the blockchain, despite the fact that fees are now the most sort of welcoming that they've been since the start of the rally. So I think, and you know, I've seen a lot of people discuss why fees are so low. Generally, it seems like the consensus is number one, a lot of activity is moving to layer 2, which makes sense, and I think it's fair. But number two, I think a lot of it comes down to people being fearful and in general abstaining from market activity, which, you know, is something that we kind of see across the board. Now, let's talk about MVRV, because we haven't touched on it throughout this stream, and it's one of our most interesting metrics, I think. So MVRV ratio is an indicator that tries to quantify the average profit or the average loss of a certain group of addresses. So 30-day MVRV, which we're looking at here, tries to quantify the average P or L of all addresses that have acquired Ethereum in the previous 30 days. So what is the average profit or the average loss of all short-term Ethereum holders? Simple as that. Now, obviously, this is an on-chain metric, so it makes some assumptions, but I think overall it's a pretty good sort of gauge of where short-term and long-term Ethereum holders are at some point in time. So at the moment, Ethereum's 30-day MVRV ratio is minus 10.7%. What that means is that on average, all addresses that have acquired Ethereum in the previous 30 days are minus 10% on their initial investment. So they're below break even, they're underwater, which, you know, based on Ethereum's price action makes more than enough sense. Now, the way that people use this metric, the way that on-chain analysts use this metric, is the higher the MVRV gets, the higher the MVRV ratio gets. That means that the higher the average profits are of a particular group of holders, unrealized profits. And so there's more likelihood and more risk that people are going to start claiming these profits. As a result, we're going to see further sell-side pressure, and we might see a short-term correction. So for example, we've seen Ethereum's MVRV ratio usually in the past peak between, let's say, like 25 and sort of, what is this? 25 and 35%. Sometimes it goes as high as 40%, but not as often. And usually when it reaches these levels, it requires a short-term normalization of its price. So, you know, during the all-time high, once we started, once it broke $1,000 here, we had a period of consolidation before, so the MVRV was able to normalize before we were able to, break out once again. Similar at the period right before the coronavirus crash, around the February 14th, actually a month before the coronavirus crash, we were already quite overvalued according to Ethereum's 30-day MVRV ratio. So overall, this seems to be the level, the established historical level at which Ethereum's 30-day MVRV seems to peak and becomes a little bit unsustainable. And we might see a short-term correction, right? And then on the other hand, the lower the MVRV ratio is, the more undervalued the coin is according to this metric, and it can be a potentially opportune time to accumulate. So historically speaking, if you look at Ethereum's lows, MVRV lows, it usually tends to bottom out at around minus like 20 to 30%. So similar to where its highest are, its lowest are between like minus 20 to minus 30%. This is a coronavirus crash. It's a massive outlier. It I think crashed to as low as minus 45, even minus 50% if we really zoomed out. But it was such an outlier that it suggested that these low levels of MVRV are quite unsustainable, and we are probably going to see a short-term price recovery, and indeed we did, right? Not just short-term, but you can see what happened afterwards. So at the moment, Ethereum's 30-day MVRV is here around minus 10%. It says minus 7 because we're looking at a very large time scale. Relatively speaking, minus 10% is fine. It's still undervalued, right? It's nowhere near sort of the historical bottoms, but it's by far healthier than we were during some parts of the rally as well. So from this point on, we can say that from a short-term MVRV perspective, there is a potential for further price recovery, right? However, if we look at Ethereum's 365-day ratio, which is the average profit or loss of long-term Ethereum holders, the picture is a little bit different. So let's look at the 1 day. How granular can you get with MVRV? Let me show you. So you click on MVRV here, and you can be as low as 5 minutes. However, you need to check this metric. This is an intraday MVRV metric. There is another metric that we have, which is just a flat MVRV, which gets updated once a day. If you want to go very granular, you choose this one, intraday MVRV ratio. So I'm using the 1 day scale just because I'm looking at the last 4 years of data. But anyway, at the moment, Ethereum's 365-day MVRV is about plus 31%. So long-term Ethereum holders still have some profits to claim if they want to claim them. We are not at the sort of these massive highs that we've seen, throughout the rally. However, you can't technically say that the long-term Ethereum MVRV is undervalued. It's not. I think there's potential for further price recovery. However, there's also quite a long way to go before we hit bottoms here, right? So I think long-term MVRV is a bit more ambivalent. Short-term wise, we're at a fairly undervalued territory. So yeah, something to keep in mind. What time is it? It's already 5. Okay, so let's look at another coin. Guys, I'll be talking about Ethereum a little bit in my weekly pro report. So if you want more information about where we are at the moment, stay tuned for that. Overall, I think sentiment is bearish. Social sentiment is bearish, which is good. I think the overall decline in network-wide activity concerns me a little bit still. Although some people in the sentiment team feel different about it. Like, for example, Max here on the call, he thinks that it's fine that the network activity is low. and it's going to start to recover once the price starts to recover. So it's going to be a lagging indicator, which I can totally see. So the fact that, network activity is low is not necessarily like a nail in the coffin for either Bitcoin or Ethereum. It just suggests that there's a lot of fear in the market, which again, doesn't necessarily need to be a bad sign. Its MVRV ratio is also fine, especially its short-term MVRV ratio. It suggests that there's more room to grow from this point on. We haven't looked at a few other interesting metrics like age consumed as well as network profit loss, but we'll do that another time. Also, its exchange metrics are looking fine. There's less and less outside pressure. Good. Like you want a little bit of a fear in the market, but you don't want you need a period where sell side pressure is going to decline so that we can, bulls can do their work. Overall, I mean, from an on-chain perspective, Ethereum's not showing many massively red flags. Let's put it that way, right, at the moment. Okay, Max, what was the other coin? Was it Polkadot?
Yes, the second one is Polkadot.
Okay, cool.
And then it's index finance. It's in chat too.
Okay, cool. Cool. All right, let's look at Polkadot. So unfortunately, like I said, if you guys want us to look into Polkadot, we'll look into Polkadot. However, we can't still look into Polkadot's on-chain data because we haven't yet integrated it into our system. There's no website on the planet Earth that has on-chain data for all blockchains. It would be impossible, and the infrastructure would be massive. We have by far the biggest, the most comprehensive coverage as far as on-chain data is concerned, because other than Bitcoin, we also have full data coverage for Litecoin, Ripple, Ethereum, BNB, and all ERC20 coins. However, Polkadot maybe is on the roadmap. Keep your eyes peeled. But currently, we only have additional sources of information for Polkadot. By additional, I mean social data, price data, as well as development activity data. So we can look at Polkadot from those options, but not from an on-chain perspective. So let's start by looking at Polkadot social data. All right. So this is, let's look at the 1 day. There we go. Okay, so social volume is shows the amount of daily Polkadot mentions on crypto social media. And in general, speaking in general, spikes or strong upticks in social volume, especially when they occur during price rallies, like they happened here. There we go. Here, and even here, right before the correction. And slightly here at the all-time high. These spikes in social volume suggest that the crowd is becoming more and more aware of the rally, and as a result, there's an increased bullishness towards a particular project. Oh, I've gone a little bit, I've zoomed in a little bit too much. And as a result, we are going to see there's an increased risk of a short-term price correction because more people are talking about it, more people are becoming aware that the rally is happening. But also, there's going to be, because everybody's already aware that the coin is pumping, there's going to be less buy pressure moving forward. So if I change the interval here to 8 hours, yeah, we can see a clear uptick in the amount of social mentions towards Polkadot around its latest price uptick. It's not the highest, but overall it did suggest that more people are talking about it than usual. As a result, there was a short-term correction. Not as a result, but it coincided with a short-term correction. We've seen similar things here as well. Now, overall, the only thing that I would say as far as social data is you want to look at periods where social data or social mentions are low. So the coin is flying under the radar, right? Social data in general is more of a top indicator, or social volume in particular is more of a top indicator. So what you want to make sure while the coin is pumping is you want to make sure that its social volume is not rising massively, because what that means is that the crowd is starting to pay attention to this coin, and that's usually not a great sign for its short-term price action. We've done some backtests on this idea, and across the board, every time that we do backtests, when there's a huge spike in social mentions, it seems to indicate a period of short-term price downtrend for the coin in question. As far as social sentiment is concerned, so this metric, essentially what it does is it takes all of these mentions, daily mentions of Polkadot, and it filters them through an algorithm that we've developed that labels all of these messages as positive towards Polkadot, negative towards Polkadot, or neutral/ambivalent. So at the moment, the average sentiment towards Polkadot is also fairly bearish, similar to Bitcoin, similar to Ethereum, similar to pretty much every top cap that I've checked out throughout this week, suggesting that, the crowd is concerned. There was a little bit, I think I already mentioned it, there was a little bit of an uptick during this rally to 25. However, since Polkadot failed to breach above it, we've gone back to a overwhelmingly bear sentiment. So based on also some analysis that we've done, overwhelmingly bear sentiment is probably better for coins than an overwhelmingly bullish sentiment, because it means that people are underestimating the power of this asset and the potential for the asset to recover, right? So that's as far as social mentions are concerned. And then looking at the development activity of Polkadot, I think it's quite high. Yeah. So I mentioned this every now and again. People ask us about Polkadot a lot on these streams. One of the metrics that I always show is this. It's development activity. It's a very underrated metric, in my opinion, because it's not going to tell you whether a coin is going to pump like in the next week or so, or whether it's going to dump in the next week or so. It's not a short-term indicator. The development activity of a project, essentially what it shows is how much is a project investing into coding manpower. How many resources is it investing in order to push their product, polish their features, update their roadmap, innovate, in general, sort of stay competitive in their niche. So the way that we calculate development activity, by the way, you can see it here, is where are you? There we go. Is we look at the GitHub repositories. We scrape GitHub repositories of thousands of different projects, and then we eliminate all of the known code related events, so that the only thing that we really analyze is events in GitHub that have direct connection to code-based activity. And as a result, we kind of level the playing field for all projects that we're analyzing, because some projects will use GitHub more as almost a project management tool. They're going to write a bunch of comments. So we discard those, and we only focus on events in GitHub that have to do with pushing code. So development activity, I think, is a pretty good indicator of whether a project is continuing to work on its product, work on its platform, or it's sort of declining overall. So if we look at Polkadot's development activity, first of all, through all time, I mean, what else is there to say? It's great. It's looking very strong. It's not going to tell you whether Polkadot is going to pump in the next day or next week or whatever, but it does show a very strong, sustainable uptick in the amount of interaction with Polkadot's GitHub. And this is, obviously, regardless of what its price is doing. And this is also always what you want to see in a project. Like, I think every time that I talk about development activity, I look at Maker, because Maker has a very similar development profile. It's essentially from the start of Maker's price action in 2018, they did not care about what the Maker coin was doing. They just kept developing, kept building, and eventually the price caught up. So as far as Polkadot, from a macro perspective, Polkadot's development activity is looking very good. Polkadot devs don't sleep, exactly. And then one thing that we can also see here is comparing Polkadot to other blockchains and to other projects in terms of development activity, and sort of to put it in perspective, how busy Polkadot devs are compared to every other dev in the cryptocurrency space. So the easiest way to do so is you just go here to watch list, you click on all projects, and what's going to happen here is this list is going to populate all of the coins that we have in our database. It's around 2,000 different coins. One of the columns here, and by the way, you can select your own columns by clicking on these three bars here. Let's say I don't want to look at market cap, I don't want to look at rank, I don't want to look at market segment, so I close these. I want to look at development activity, but you can also add other things like development activity, 1 day percent, 30-day percent change. Okay, so let's look at these. So when you click on one of these metrics, let's click on the amount of development activity over the last 30 days. So once we click on it, this list is going to be filtered by the highest to lowest projects in terms of the last 30 days of development activity. So the top 3 at the moment are, according to our data, Cardano, Kusama, and Polkadot. Now, there are a few caveats here, obviously. Number one, not all GitHub repositories are public. So some repositories are private. However, we are, continuing to increase our comprehensiveness of GitHub data. Number two, some projects use GitLab. It's a very small percentage, relatively speaking, but it's like this data is not like computing the entirety of development efforts overall. But I think it's the best approximation that you will find anywhere on the market. So from an approximate standpoint, Polkadot is very much so in the top 5 to top 10 projects according to development activity. You can also, let's say for fun, let's see what the projects are that have gained the most in terms of development activity over 30 days. I think this might be a bug. 4,000 is too much. We've got some LON, Icon, KNC, okay. YAM, LRN, Loopring, okay. Some very popular projects, a lot of DeFi projects actually, starting to work harder than usual. Okay, interesting. But anyway, Polkadot seems to be doing fine from like a fundamental perspective in terms of how its developers are progressing. They're doing fine. They're not stopping. They're not doing any sort of breaks or vacations throughout this dump. They're just continuing to build. So it's the type of project, obviously none of this is financial advice, but if you're doing value investing, if you're doing due diligence on a project, you want a project who's it just makes sense. You want a project whose developers know what they're doing and they're continuing to improve and grow in terms of daily and monthly output. You don't want a project that looks like an exit scam whose development activity has been completely sort of concentrated around its ICO, and then since then it's just dropped to nothing, right? Which a lot of projects, their development activity charts look like that. They look like the opposite of Polkadot. So something to keep in mind. Okay, a lot of scams, exactly. Okay, so guys, I think that's gonna be everything that we can cover today. It's already been an hour and 15 minutes. Brian, anything to add before we go?
Nothing to add. I appreciate everyone's participation today and the great turnout. Please continue to spread the word about us. You have referral links available in your account settings that you can generate anytime, any place. And spread any Santiment page with your audience with the referral link at the end, and you will get 25 to 35% of that membership payment that they make. So please utilize that. Check out SanR some more, and we look forward to answering many more questions that you have next week. And make sure to tune in at the same time, same place.
Yep, exactly. So one last thing before we go, if you are already not a subscriber to Santiment, everything that we've talked about today is available on app.santiment.net. So if you're new to the stream, if you want to take a look around the platform, just sign up for free for 2 weeks and get a full access to the entire platform. Everything that we've talked about, plus a lot more, plus daily insights that somebody from the market, from the Santiment team, writes about the market on a daily basis. After the first 2 weeks, it's just $49 a month, which is by far one of the most affordable on-chain plus social coverage platforms on the market. However, if even that is too much, 25% off if you use the code TWIC during your checkout. So TWIC stands for This Week in Crypto. It's an acronym of this call, which we call This Week in Crypto. So everybody that pays attention to these calls and stays until the end, we always mention this code. So for those that are really supporting us from using these streams and watching these streams, just use the code TWIC during the checkout and you'll get 25% off your first monthly or a yearly billing cycle, whatever you decide. Thank you everyone so much for sticking by to the end. Please do like the video and share with anybody you think is going to like it, because it helps us grow and it helps us produce more of this content on a weekly and monthly basis. So we appreciate it very much. If you have any additional questions that I and Brian have not been able to answer during the stream, probably you do, join our Discord. The link is in the description of this video. I remember last week there were some questions that people then asked me in our Discord chat, and I was more than happy to answer them. So if you have any unanswered questions, things that you would like us to take a look into, join our Discord. There's a few trading channels there, as well as a Sandbase Pro group for people that are pro subscribers, where we talk about market setups and charts pretty much every day. If you want to DM me personally and talk about either the stream or the market in general, my handle is IBIS on Discord. So just ping me there and let's chat. All right. Thank you, everyone. Talk to you all in 7 days. Yeah. Thanks, guys.
Bye-bye.